Inflation is still coming down, but not quite as quickly as we expected or the Reserve Bank would like. Accordingly, we have adjusted our rate call. We now expect the RBA to remain on hold until its November meeting, whereas previously we'd expected them to start cutting rates in their late September meeting. Inflation in the March quarter was a bit higher than we expected, although on a year-end basis it's coming down. The trajectory is not as quick as people expected. In particular, we're seeing strong growth in areas like pharmaceuticals and insurance. These aren't areas that suggest that consumer demand is strong. In fact, consumer demand is not strong. But together with a somewhat stronger labour market through the March quarter, we think this changes the balance of risks that the Reserve Bank will be reacting to. They are going to be on hold. They're not going to be ruling anything in or out, but we don't think it's tipping the balance towards them actually hiking rates. We think that holding rates for longer is a more likely scenario at this stage. I just got back from visiting with customers overseas in Europe and in North America. And the Australian story is a little bit different from what we see in some other countries. In particular, in the United States, consumer spending is strong, inflation has stalled, it's not declining anymore, and people are really expecting the Fed to be on hold for quite a while. Demand dynamics there are strong, and a large part of the reason for that is that macroeconomic policy isn't even touching the sides on the US consumer. In the US, most people have fixed rate mortgages, so the higher interest rates aren't hitting their income cash flow. In addition, their tax brackets are CPI indexed, so they're not even seeing the effects of a bigger tax drag from the higher inflation, the way we're seeing in Australia. So in the US, incomes are growing and consumers are increasing their spending, and this is adding to the strong demand and the support to demand being introduced by a very large government deficit. Meanwhile, in Australia, consumers mostly have variable rate mortgages. They're facing fixed income tax brackets until the tax cuts come in July, and that means that their incomes have been squeezed in a number of different ways. In Australia, consumption per capita has actually been falling for a number of quarters, where in the United States it's been rising. So the two countries face really different macroeconomic policy environments. That said, they are both seeing a slow disinflation at this stage, and this is inducing central banks to push out when they're likely to start cutting rates. But there are rate cuts on the horizon, just a little bit later than what people thought. While Australia is a bit of an outlier on the downside in terms of consumer spending, and the US is an outlier on the upside, most other peer economies, including Canada, Europe and the UK, are somewhere in the middle. Most of them are seeing a bit more pressure on the consumer, and consumption per capita is going sideways. All this adds up to a need to look at each country's circumstances individually, rather than thinking that everyone will follow the Fed. While both Australia and market pricing of the Fed decision have been pushed out, each is for their own circumstances, and we shouldn't assume that one necessarily follows from the other.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.